So looking at the dollar index yesterday and then today, let me just blow this up just a tiny bit. We'll leave market memory just for a moment. This was yesterday's candle. This, I won't call it a spinning top, but the actual shape is that. It's just not. It's just in the wrong place. Tall wick to the top, kind of wicky to the bottom, and then a kind of squat body. You can see the range that we had reached. In fact, the high yesterday was 84.02. 84 came in and just sent this thing, the dollar index, lower. We were able to recover from the low it made, that 82.42 low. So we were able to actually close just barely above that 82.85 level, or 82.80 minor psych number at 82.85. So bottom line is, this thing had a huge range yesterday, top end to the bottom. What was more interesting to me, and the reason I'm not surprised with the weakness today, yesterday we were up about 1.25 at some point. We were up a full point at one point of the day. I know early in the morning we actually were. And as the day went on, let me zoom into the 30-minute. As the day went on, you can see we made this high here. This was 8 a.m. Again, this is the 6th. Today being the 7th. This was the 6th. And about 8 a.m. we made our high. Tested that 84.02 level, and we basically spent the rest of the morning and pretty much most of the heart of the Asian session either moving sideways or heading down lower. So definitely a lot of rejection at 84. It's interesting that we got up to where we were. I think what's really what's really interesting to me is it's not Frankfurt or London that rejected this. It's New York. New York sent this lower. This is not, in fact, if anything, Frankfurt and London accelerated the move higher. It's New York, along with London, but it's the additional financial center of New York sending this thing lower. Can't talk this morning. All right, so that's what I really wanted to focus in on. That we had hit 84. There is certainly resistance at 84. I'll tell you what. We stalled and kind of gravitated around 83. I won't call 83 support or resistance, but it had some gravitational pull. What do I mean by that? Well, imagine 83 being kind of the center of the sun, if you will. Okay? And let's give it a nice yellow. So imagine 83 as the sun, and price are just kind of gravitated towards it. It's not leaving it too far. It's not, really close. It's just kind of rotating around it, if you will. So that's what I mean by that. And then eventually, poop, that was it. So once we actually really started establishing 83 as resistance, and you can see that happened about 1:30 this morning. Once we started seeing this resistance here, the whole thing changed. Okay, that's when we broke down lower, and it was just a situation where now we've got a tremendous amount of weakness now in this market, and we're sitting just above the 233 lazy days line here. You can see. Okay, it's on the 30-minute chart, of course, and there's the 200 period simple moving average as well. Now I'm going to go ahead and just go into market memory here on this time frame. Also squeeze in some more lazy days lines. Remember also, this week, this first full week after the holidays, after the Christmas holiday, after the New Year's holiday, this is the price action that's going to kind of, bring some normalcy to the market. Okay, so here's where we are right now. Go back over to that daily chart, and you can see that on the daily chart, or more or less a market memory here, we're trying to segue to a sideways market. We're actually getting the beginnings of a 3. This is a transitional 3 o'clock market cycle. Okay, so the cycle indication was up, then it went down, and now it's transitioning to a sideways. So this is where the market's probably going to throw its hands up in the air and say, okay, we don't have enough to break 84. We don't seem to have enough bearish yet to break 82. Here's the full two figures that we're going to trade within, and that could be where we're at. I don't know. I'm kind of curious about some Fibonacci here. Just pull a quick Fibbo. Interesting. Golden mean. Okay, 50%. Pretty interesting. That golden mean as resistance is pretty interesting up here. 83.90, and again, I don't have this perfectly, so I could be off by a few ticks here or there, but we definitely can see that we were dealing with that golden mean right there. All right. So that's a look at the dollar, what it's doing. Now, where's it going from here? Well, when we consider that the daily's moving sideways, the 30 is, still 4 to 6. The 60 is a less shallow but fresher angle. It's trying to get 4 to 6. Our 180s and 240s. You talk about long-term intraday charts. They're 2 to 4. I wouldn't call this a 12 to 2 by any stretch. Okay, so we're looking at what could be a pretty decent 3 o'clock. But even though the daily is transitioning to 3, I just have to stress the fact that it is a severe pullback from where we were yesterday. So this is weak. Okay, it's not weak in terms of the cycle indication, in terms of the trend, but it is on heading weak within this two-figure range that we seem to be in, say 84 to 82. And 82 is by no means anything other than psych number support. We had a little bit of 82 in play back on the 15th. Okay, as far as support goes, with a low of 81.97. The bottom line of the wave is there. You can see also the 89 lazy is there. So there's a lot of reasons to pay attention to 82, which is why I'm just assuming that there will be support there. So resistance at 84, support at 82.